All right, folks. The talking heads are out there talking with the markets, just all the action over the end of the session Friday and into the weekend. And so I'm a talking head, so I'm going to talk too. Amazing. If you look at, Don Kaufman, love him to death. I wouldn't, if I didn't like him, I would not have entitled a video, The Genius of Theo Trade. However, the content, the slant, the editorial viewpoint of his most recent video, fear, get afraid. It's, in service of his short. And I can tell you, if you go back, and this is very common among old school traders, and is that they are bearish. They're always perma bear conditions. Now, if we look, everybody anticipating this market going to get ugly. The market doesn't always give you what everybody is anticipating. That is a point I want to make. However, I do have to give it to him as far as one thing. Let's take a look at this, and I'm not showing you my I'm not putting this up to show P&L. Let's move down on this little list here, and maybe I can get slightly out of the way here. Let me go right down there in the corner. Look at this, okay? This is pretty extraordinary here. We have the E-minis, okay? E-minis up 6 when the VIX up a point. So market up, NASDAQ up 26, E-minis up 5 and change, and the VIX up, okay? Usually the VIX don't go up when market goes up, right? You know that. That's a basic thing that anybody who's watching the show already knows that. So that is a bit concerning for people who are short volatility, because VIX up, market up. That is in testament to the fear people are feeling. There's uncertainty. Nobody knows what's going to happen. Does something come out? Does the president all of a sudden start tweeting like, I've had it, I'm walking out of these G7 thing? The tweets that have been coming out have been positive. Met with Modi. Seems to be like a little de-escalation of the China thing. I think part of it is just, human nature is that you can sit there and talk a bunch of smack when you're sitting at home in front of the TV, but once you get actually in front of a world leader, it's hard to talk smack to their face. It's just not as easy, and thus things are calmed down a little bit before the G7. Now, a great point. I just watched Theo Trade, and maybe I shouldn't watch somebody else's commentary right before I put my own on, because it's going to slant me a little bit. But interesting from Don Kaufman saying, and if we look at the Fed funds pit, when I was trading the 10-year, I was over here, and the Fed funds pit was like right over next to us on the side there, and like nobody really was in that pit. It's very, very small. It's just a cup. It's almost like it's all electronic, and there's just a couple like token people in the Fed funds pit. Of course, I'm talking about the Chicago Board of Trade, and I spent about 2 years there. Maybe it was even less, but it felt like 2 years. I was in the 10-year, which is the 10-year pit is crazy. 10-year U.S. government bond options. And one of the reasons that pit is crazy is just because 10 years is most closely approximates the average mortgage people take out. I think the average mortgage people take out, at least then, was about 12-something years, 12 and change years. And thus, a company comes out, somebody sells a mortgage to somebody, they're not, your local bank in your town is not necessarily in the business of taking a position in bonds. So they sell a mortgage to you, they price it around the 10-year, and then they hedge it by trading a 10-year against it. That's essentially what happens. Now, your local town banker may not understand that that's what's happening, but that's essentially what's happening. So, but 10-year crazy pit, Fed funds pricing in a 95% chance of a rate cut. And, Mr. Kaufman's discussing the fact that, the Fed's not saying anything about a rate cut, and yet there's predicted a 95% chance of a rate cut. But this is like a pretty well whispered thing on Wall Street that, like, if we don't get a rate cut at the next Fed meeting in September, there's going to be hell to pay for the markets, right? So the rate cut is coming. It's pretty much set in stone. And, what Mr. Kaufman is insinuating is that the market doesn't require a rate cut right now. So the market's going to have to go way lower so that rate cut can be required. I don't see it that way. I see it as they're going to cut whether the market's up 100 points, down 100 points, no matter what, because, look, the president's out there saying we need a point rate cut. We need a rate cut of a point. Powell's an idiot, all this stuff. He's got to deliver something, right? Because we know that this is the way he is, because he changed his stance after that first time he raised rates. He got so much blowback from everybody, not just the president, but all the talking heads, everybody. Well, not for me, but everybody, a lot of people, everybody who matters, let's put it that way, or a ton of people. And he switched things to a loosening stance. He's cut rates once already. That was a quick turnaround from we're raising rates to we're cutting rates. Very quick turnaround. He's going to cut at the next meeting. It's set in stone as far as I'm concerned. We don't need the market to move way lower for that to happen. It's just going to happen. Now, all the fear and all the talk and the VIX up, VVIX noticeably hasn't moved today, okay? And, they're talking, well, VVIX went from 100 to 111. Yeah, that's part of the story, but the other part of the story is, where did it actually come from? It didn't come from 110. It came from higher. Let's take a look, if we back out these charts a little bit, of where the VVIX came from in the last week or so. Because it hasn't been like a slow move from like 83 up. No, I'm going to show you the chart right now of the VVIX, okay? VVIX. And let's back it up to, let's see, a 20-day. Okay, so here we go. Theotrade's making light of the fact that, wow, the VVIX went all the way from 98 all the way up to 110. That's amazing. What a move. Okay, well, not really, because look, it made that move a couple weeks ago. It made that move a couple weeks before. And it also made the move down, and it made move down again. So if this move from 100 to 110 is so significant, then why wasn't the move from 110 back to 100 significant as well? It had to have been as well then. To me, the VVIX, the trend and the move is important, and I do certainly agree that a 111 VVIX is something to be concerned about. However, when you say, well, the VIX isn't that concerned about things, so instead of using that as an indicator, I'm just going to throw out that indicator. That the VIX doesn't matter anymore because it doesn't fit into my my viewpoint. So, if the VIX isn't up that much, so let's just forget about the VIX. It doesn't know what it's talking about. That's what a lot of people are saying right now. I can certainly agree with the fact that this market is not down a lot. It's down. It's right off the highs. And certainly, if it starts cruising lower, volatility is going to explode. Certainly, if we take out the lows from that first week in August, let's look at E-minis here. If we take out the lows from this like August 5th date, which was 27.75, and we start moving lower, and all of a sudden we're down 10%. Let's back up the E-minis here, okay? If we take out the lows from that December, okay, certainly volatility is going to explode. However, I think we're getting a little ahead of ourselves here to be saying, I'm short 1,500 deltas in the E-minis, and this thing's definitely going lower. It kind of seems more to me like somebody has a short position on, and they're trying to justify it, and they've got all these people watching them, and maybe if they say, wow, these things could happen, it's going to go lower, maybe the prophecy will be fulfilled. To me, yeah, it's definitely something to look out. The VIX up, market up. Turmoil going on. Tariffs are not good, et cetera, et cetera. We've seen this market, all we've seen this market do is just shake off stuff. So until it actually stops shaking off stuff, I'm of the opinion that the market's going to shake off stuff again. Like I said, a lot of old school traders are perma bears, and yeah, on this move here in December, they made a ton of money, and that's awesome. But for every time you do get a move like this, you get several just nothing happens and it goes back up again. And just from the data that we're looking at right now, so far this week, nothing has happened and it started going back up again. That's just the reality of what the numbers are. And yeah, it's disconcerting. The VIX up with E-minis up. However, and yes, the actual volatility has been higher than vol reflected in the VIX. However, we have been in a tight range, and we haven't really broken the range. So depending on how you're judging volatility, yeah, it's moved around a lot, but only in a tight range. We haven't really gone anywhere, and not really going anywhere means that if you don't really go anywhere long enough, then volatility comes in. So we'll have to see what happens from here. It's definitely frightening to see the VIX up with the market up. We don't often see that. Definitely frightening that VVIX is back up to 110. It got down to 95, but now it's back up. If we look at the VIX, we have not taken out the highs of a couple weeks ago. Okay, let's take a look at the VIX in the last 20 days. It's descending. It's a descending triangle here still, right? You can see that, right? Lower high, lower high, lower high. Now, certainly it could bust through 24, 25 and move to the upside. That certainly could happen, but at this point it hasn't happened. So let's not get too far ahead of ourselves here. I watched the TheoTrade video, and everybody's getting whipped up into a frenzy here to short everything in the world. And, people like Don Kaufman are very, very good, smart traders and know when to turn things around if it's not totally working. But a lot of people that are watching are not going to be, he's going to quietly take off his short if it starts to not work. The only thing a lot of viewers are going to watch is that one video where he's saying, well, it's getting really scary here. And they might actually just put a short on right then and then not take it off. And all of a sudden we roll higher, or this volatility kind of fizzles out. Okay, we've had some big moves, but what's the realized volatility? What's the realized volatility for today? Well, let's see. S&P is up 0.11%. That doesn't sound that volatile, right? There are dangers out there, but we've been moving sideways. We'll have to see what happens. This certainly could get worse, and I'm certainly not saying that there's scary stuff out there. But until it actually does, move out of these bounds and move lower and break the volatility box, we are still in a trading range. And there's little understood about these algos that dominate the trade in the market these days. And so I think we have to be a little bit more patient and wait and see what happens here. It looks like E-minis could go negative pretty soon right now, up 175. I did take off my long triple Q position for pretty much of a scratch earlier in the day, but I'm hanging out. I set my position and I'm forgetting it in the VIX. It's like a month out. 34, 31 put spread. We'll see what happens. Currently, market's up on the day. Nothing's going on. And the guy that used to stand next to me in the pit, Randy Dalby, had all these sayings that he would use. Randy Dalbyism was, don't sell a dull market. And right now, nothing is really happening. Yeah, there's tweets and everything that happened, a lot of fireworks last week. But right now we're up a little on the day and nothing's really happening. So certainly watch the Theo Trade video. Certainly analyze your risk to the downside. Certainly be aware of what would happen to your positions if we have a rocketing down move, because there is the potential there for us to go way, 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 way lower. That is certainly true. And for me, I am short the VIX a little bit, but my other holdings are in cash right now. So I'm aware that the situation could get worse. But in the meantime, this market could just do what so many other markets have done before and just shake this stuff off. So interesting to hear your feedback. Thanks for watching today. And we will have to see what happens. It's exciting here. One thing's for sure, if we're just hanging out here and the E-minis up, if every day this week we're up 5 in the E-minis, this volatility will come in. It's kind of a wait and see situation right here. Currently VVIX down 37 cents, and let's go through our charts one more time as we close out here. So here's VVIX. That's not VVIX, that's VXX. Here is VVIX, and we've seen, the move to 110 down, the move to 117 down, the move to 111. Here's VIX. Looking a little bit similar to VVIX right now, actually, which isn't always the case at all. But I'm not going to throw in the towel on the short stuff unless we can break this high of 25. And so we're just going to have to wait and see what happens here. Here's UVXY. Once again, sort of descending triangle here. And over enough time, we know this goes lower. So set your days till expiration far out and forget it. That's what I'm doing. So far, trades for me today, 0. Well, TQQ is in a different account. Set them and forget them, folks. We'll see what happens moving forward. Thanks for watching. See you in the next one.